What is going on, guys? It is SquireTrades here, back with the 14th installment of Road to Becoming a Full-Time Trader. My name is SquireTrades. It is September 20th, 7:20 p.m., and we're locked in. It's been a great week. It's been a great day. It was a great day yesterday. I believe my last upload was on Monday or Tuesday. It's been a great week. I took another loss today. We're going to cover that really quick. I don't have much time. It's 7:20 p.m. I'm going out with my friends here in about an hour or two or so. So I thought I would make this really quick and just briefly cover today's execution. So let's just jump right into it. You can see, what do we always start on? We always start on the 4-hour chart. If you've been watching some of these videos, you know this, right? Let's just replay this back to this morning. I get up at 5:30 every morning for work. I work 7 a.m. to 3 p.m. So normally when I wake up at 5:30, the first thing I'm doing within 5 minutes of waking up is checking the markets. So if you've tuned in, you know that I like external range liquidity to internal range liquidity, or internal range liquidity to external range liquidity. I prefer to play internal range liquidity, such as these fair value gaps, right, to external range liquidity, which would be this level right here, and then so on and so forth, right? So kind of my bias coming into today was 20,256. This is what I wanted to see. I woke up this morning, I saw this candle, I saw this was kind of a trash move down, right? So I'm thinking, all right, whatever, let's just drop down to the 15-minute chart and see how this plays out. You're going to see we get down into the 4-hour fair value gap, right? And remember, internal range liquidity to external range liquidity, okay? So that's our internal, right? Internal's been taken, so now I'm thinking external. I have two targets. The first being 203 and the second being 256, right? So I'm on the 15-minute chart. And if you've tuned in recently, you'll know that I'm on the largest loss streak that I've had probably of my entire career. Definitely the largest loss streak that I've been on this entire year. I'm on, I believe it's up to 7 after today's loss. And you know what the beauty is? I've taken 7 losses in a row and I've blown 0 accounts. That's called risk management. You have to be a good risk manager in order to stay in this game. You have to stay in the fight. So once we've taken our 4-hour internal range liquidity, I'm immediately looking at our external liquidity. This is what I want to see, right? So what do? We came down. What do we have here? We have our sell side liquidity, right? And then when we sweep the sell side liquidity and we displace back up, what happens? Well, we know that we have a swing high, the low gets taken out, and then we displace in one move above this high, right? So what does this candle here become? Right here, this swing high that we displace through, right? It's two things, okay? One, it's a market structure shift, okay? That should be pretty basic by now. If you've been watching these videos, you should know this is a market structure shift. That's simple, right? What else is it? Well, not only is it a market structure shift, it's also a breaker. So there's our breaker block. If you're not familiar with what a breaker block is, go back to ICT, Inner Circle Trader, his YouTube channel, and familiarize yourself with what a breaker block is. So not only is this a breaker, not only do we have a market structure shift, not only have we swept sell side liquidity, what else do we have? Our value gap. Cool, right? We like that. So I'm sitting here and I'm thinking, here, boom, boom. That's what I'm looking at. Because if you just look at this really quick, our first TP is sitting at 2.97R. Our second TP, 3.9, we'll call it, okay? So most times when this happens, right, and I'll let this play out really quick, I end up getting an entry right there. So most times when this happens, right, you guys have seen me, I mark out the 4-hour, internal to external, right, and then I'm on the 15-minute, I see the displacement, I'm waiting on us to retrace into this fair value gap, And then when we retrace into the fair value gap, then what am I looking for, guys? Well, then at that point, once we've entered this fair value gap, I'm down on the 1 minute chart looking for an execution model. Well, I'm on a big loss streak. So I actually just took that part out of my trading plan today because some of the losses that I've taken recently have been timing errors, not bias errors. Okay, so I would get on the 1 minute and I would get my execution model and I would end up getting stopped out. And then after I would get stopped out, what would happen is the market would then run in my favor. So it would look like, we make this move up, we make this move down, right? And then somewhere in here, I get long, but then I would get long, we'd sweep liquidity one more time, and then the model would actually play out. And right here, this level right here, is where I would get stopped out. So today, to avoid that, I thought, okay, well, maybe I can outsmart the market. Maybe I can just forget about the timing piece. I'll play a little bit wider of a stop, right? And this is what I was looking at today. And initially, it went well until it didn't. So I'll just let this play out, and you can see. It ended up taking about an hour, but we did actually end up getting stopped out. And it is what it is. I'm on a 7-loss streak. Who cares? I mean, I haven't lost any accounts. I'm still, I think my PA that's closest to getting blown is five trades away from getting blown. And then I have another one that's much farther away from getting blown than that. And then another one that's like 6 trades away from getting blown. So at the end of the day, it all comes down to risk management. It all comes down to staying in the game. And here's the last point that I'll make in today's video. The market has seasons. Just like I live in Indiana, man. Indiana has 4 seasons. Spring, fall, summer, and winter, right? The market has seasons too. And typically August, last month, is one of the worst months to trade, right? Summer and winter are two of the 2 worst seasons to trade. You'd rather be trading fall and spring. That's why ICT says, I take it as word, I believe it, I buy into that, okay? So here's where I think we're at right now. The market's in an awful season. The model that I and my trading partner trade is having a rough time. That's fine. Because at the end of the day, via risk management, we're still in the fight and we're always going to be in the fight and we'll never stop fighting. We haven't blown any accounts. We have all of our accounts. We're still green all time, easily, and we have no problem with that. We're making money now. Now it's just a matter of slowing down, waiting for the market to iron itself out, and continue pulling our model to the ground. That's all I have to say today. It's going to be a short episode. To the people that have commented, liked, subscribed, thank you. I will link the Discord that I am most active in and involved in down below. Should you decide that you have questions or are curious about my model and the way that I trade, you're more than welcome to join. You can @ me. My @ in the Discord is @SQUIRE, Squire. So with that being said, happy Friday, guys. Go have a great night. Go have a great weekend. Go have some fun. Go hang out with friends. Go do what brings you peace. Go do what makes you happy. And have a great weekend. And we'll see you guys back next week. We'll maybe see you on Monday, maybe Tuesday, maybe Wednesday. I'm not sure what the news cycle looks like next week, but we'll see you back next week. You can count on it. It's been SquireTrades, guys. We'll see you next week.